Welcome back. You are watching a special edition of Mornings with Maria this morning. We are coming to you live from the J.P. Morgan Healthcare Conference here in San Francisco. This is the most well-attended investor conference of any conference. There's a lot of investors here, private equity, healthcare executives looking for deals. Financing, of course, a key topic for attendings. So how will the financing of healthcare deals fare in 2017? I want to talk to one of the leaders in the business. John Martin is with us. He is co-CEO of Antares Capital. And John, it is good to see you. Thanks so much for joining us.
Good morning.
First, characterize the market. What are you seeing right now in terms of healthcare deals?
The healthcare M&A landscape continues to be very robust. We saw that throughout 2016, and in the early stages of 2017, we see a robust pipeline of activity continuing.
So I'm just looking at the wires here, and something is just crossing. We got a deal happening right now as we're sitting here. United Health is acquiring surgical care affiliates, $57 a share. They're saying that they're creating a comprehensive ambulatory care services platform, including primary care. This is ambulatory business. Are there sectors within healthcare that are busier than others?
You know, I think that across the healthcare spectrum, there is significant activity, both in providers, in suppliers, in manufacturers. You know, our business is really focused on middle market companies. So we deal a tremendous amount with service providers in that space, medical device manufacturers, component manufacturers that service larger medical device companies.
For a long time, you know, I'm looking at the deal flow, and I assumed, well, when you can't see organic growth, you acquire growth. And that was one of the issues for the economy in general.
Right.
And part of the reason we saw so many deals in 2015, which was, of course, a record year. Why so much activity in terms of mergers in the middle market space?
Well, I think you're right. I think organic growth is more difficult to come by in the economy that we've been operating in. Across our portfolio of middle market borrowers, we saw top line growth on average of 9% last year. That's almost 4 times what you saw in S&P 500 companies. So I think that revenue growth, both organic and through acquisition, is the way a lot of investors are looking at the world.
Well, obviously, we're waiting on Donald Trump's economic plans to really materialize and take impact. What about that? What are you expecting from lower taxes, from a rollback in the regulatory environment?
I think the agenda, from everything you hear about it, is going to be very pro-business. You know, lower corporate tax rates seems to be high on the agenda. That will be positive for companies, large companies, and middle market companies that we deal with. That should spur meaningful investment by these companies, whether it's in capital goods or broader service providing.
You've got $17 billion assets under management. How do you allocate capital right here?
So we are a senior secured lender. So we provide leverage for private equity sponsors, leverage buyout. So what we have found is that there is tremendous attraction for private credit across the globe. If you look at pension plans, insurance companies around the globe who have been operating in a zero interest rate environment for almost 10 years now, they view the arena that we play in as a very attractive area for investment.
And then there's Obamacare and whether or not we're going to see big changes. Congress obviously working right now on repealing and replacing. What would make sense to you? What are your expectations?
You know, my expectations is that there is going to be a transition period. Clearly, there's going to be change. But whatever change comes about is going to be transitioned in over a period of time. I think that's subject to a lot of conversation, whether it's over 2 years or 4 years. You know, the Republican Party seems to be focused on universal access as opposed to universal coverage.
Right.
And so that will create a number of changes in and of itself.
Will it impact markets?
I think broadly speaking, it may impact markets. I think just as Obamacare impacted markets, as companies tried to adjust to that.
Right.
But again, in the middle market, companies are very adaptable. You know, they really tend not to focus in a huge way on what's going on in Washington. They just continue to operate their businesses. Sure. And whatever comes out of Washington, they adapt to.
All right, we'll be watching. John, good to have you on the show today.
Great.
Thanks so much. John Martin is co-CEO, Antares Capital.